CTM, happy Friday. What's going on, everyone? Wherever you are right now, thanks for being here. Glad to put in a tough day's work where it's really required. I hope everyone already has their stop losses in if they're taking stop losses, if they're de-positioning, de-risking down from any entries during the correction of wave 2 or below or around the most important trend line in crypto. If they're looking to do that way, like, it's not a question if the time comes that you become a deer in headlights. Like, those orders should be on, and right now it's time to focus, and let's get into it. All right, everyone. So with that being said, let's start this Friday session off over here with probably two of the most important things. First, well, three important things over here. Yes, 100%. There's no question that this particular consolidation, the correction of wave 2, is difficult. Anyone else say, I mean, you should have comfort and clarity, but at the same time, like, hey, like I thought we were breaking out of there over the weekend, right? And then boom, 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 boom. It's tough. This is probably one of the most important questions I could think of this morning. Like, where do I get the good matcha? I'm sipping on some beautiful matcha. It has to be ceremonial grade. I bought it off Amazon. I made sure that it's organic. And listen, it's kind of high end. It's a little expensive in that it's about like $50 for this tiny little jar. But I have to tell you, it lasts forever. Like, you use a very little bit, and it's very. I don't have the brand, whatever it is. I'll have that for you Monday or Tuesday. We'll talk about it again. I'll let you know because I'm enjoying the one that I have now immensely. So I'll share that particular brand with you. And then Wes is right on point this morning, as he's continually been. Happy Friday. Non-farm payrolls missed. Bad. Now, yeah. Anyway, they're crazy with their adjustments and whatnot. Bitcoin under pressure, but still ranging. Equities off, right? Swiss franc, Japanese yen strong on the day. DXY struggling to go up. Gold sideways. A dollar story. More clarity next week, I think. And I know Wes is looking forward to the FOMC on the 15th. We're going to break it down. We're going to get together and make sure we walk away just a little bit clearer. First things first, right? Ted this morning on the Bitcoin Madeline channel, out on Twitter, showing and talking about how his view of the invalidation of the CTM meta model. There's a lot of information on the Discord in the CTM modeling channel or the Bitcoin Madeline channel. If you want to read about that, you all know, here's what I continue to focus in on right now. And Ted has gone ahead and actually drawn up for us one of the beautiful, ways that he's able to go ahead and add these deviations for this model over here, the simplified model, which you could create yourself over here on the meta model just by going ahead and adding the dates, lining up. You got to go ahead and align to custom and scale from custom, and then just add the dates of the mid-side of the correction of wave 2 for 2020 cycle, the correction of wave 2 for 2016 and 2012. But this is, I mean, it's awesome. It's pretty and it's cool. And it shows us, look, there is room for deviation between cycles. And why I like this, most importantly, I've been talking to you all about how I am looking, right, over the next week or so for us to make a big move up. This kind of gives us a little bit of nice perspective of how that should look, where that should look, why remaining within range. Listen, I just want you all to understand, I still am using the 35 days off of the correction of wave 2, assuming that low is in, as my guide going forward. In an instant, I am completely happy with dropping that and then moving forward. The thing is, I just can't do it into one of the things that we have in detailed laid out occur, right? Imagine that, like, all the planning, all the work put in place, and then, like, at the last minute, I, instead of holding firm, I'm like, and then, like, right on time. The market, I'm here to adjust to the market. The market's fluid. It's always changing. And I'm there always looking to adapt. But I'm in no rush to be like, oh, yeah, it's wrong. As soon as it's clear and it's wrong, at that point, I'll be like, all right, this is how I'm approaching it or viewing it going forward. and I'm ready for it. And you all know that sincerely and authentically. Going to the middle of November through Thanksgiving week and up until today, I'm waiting for that moment. First of all, to be like, hey, look, Benjamin, this is lengthening cycles. Nice work and good job. Like with the greatest pleasure, I will do. But and it's not a question of like, just sticking to like, this is what I authentically believe is in play. And yeah, there's a lot going on, including this massive macro events, which yeah, I think that we caught it first, or the significance of it first. But the way that it's unfolding, I feel like I'm slightly behind. So let's get in front of that. All right. But this is where we are right now, and we continue to be. Nothing to see or do over there. This is perspective. I think this is important. I think that if we do break down, right, because like right now, you all see the equity markets. There's like cause concern. I should probably talk about the macro first. Let's do that. By the way, this was yesterday, what I meant to share with you yesterday. And we have several I don't know what several means, but Fed governors have commented over the last 48 hours about the potentially accelerating both rate hikes and tapering. Like, of course, we all know that this is what we've been focused on in seeing that the central banks, Federal Reserve, were moving towards tightening. And the reason we gave was not because they want to, but because the inflation is forcing them to do so. This language is an admission that the Fed has lost control of inflation. So look, like, it's not a question of right or wrong, but this is where we are, right? This is what we've kind of been trying to navigate through. And we see that here the market is also now in the same zone, right? So we had a huge miss today. West pointed it out, just 210,000 jobs added. Employment rate doubles. What will that do for the Fed's accelerated taper? And then the market's reaction. By the way, these things will be recalculated and adjusted and blah, 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 blah. So we'll see ultimately what it winds up being. But here's what's happening is the market today, ever since, they're pricing in actually a more aggressive rate hike trajectory. And at the end of the day, regardless of what anyone believes about whether or not a Ponzi, and it is all a Ponzi, it's a house of cards, whether or not you could taper it. And we did talk about, hey, listen, if the Fed moves to taper, and taper they did, they started it back in November, continuing in December. We're going to see on the 15th at the FOMC what they decide to do for January and going forward. All three options generally remain on the table. They could pause the taper completely. They could stay on the current trajectory, or they can increase the trajectory. And you do remember we first talked about that's what it looked like they wanted to do before the investment banks and everyone else started, or JP Morgan specifically started talking about an increase to 30 billion. We'll see what happens if under the current circumstances, and by current circumstances, I mean the whole nonsense, we'll just leave it at that, that they do go ahead with a more aggressive taper. That the only thing I could say is that is a direct signal that they are sincerely worried about inflation and that they do need to knock it off a little bit by going ahead and tapering down so they could raise rates. And we all understand it's already a policy mistake. People talking about, well, it's going to be they've already made multiple policy mistakes. But again, is it a policy mistake, or are these masters of, they have different incentives? Nevertheless, it is our first, let's say, thought that if they do indeed get to hike rates at some point in 2022, it's going to cause a breakage. And then the hope and the base case is that they will come out with a massive bazooka to keep the Ponzi going. And God help us all if they don't. And this goes down deflationary. That's all I have to say right now. But the market is certainly, with the strong ISM service numbers, blah blah blah. They are now starting to increasingly hawkish Fed. All right, so they're looking for a more aggressive rate hike, and that's why today stocks are out there feeling the burn. We talk about this in a little. We're going to end with this so that we can begin with this. We got after this about a 90-minute video with Big Cheesy, with some pretty, we'll talk about that later. Let's keep going over here. Wanted to get the macro out of the way first. We could see over here S&P 500 definitely under pressure, right? You could see wick down, touching those, feeling out those lows early in the week, and we're still above critical support. We're what we deem to be critical support, okay? That's in that area over here. NASDAQ, right, blew through. We talked about that yesterday. We said, hey, like, look, I wonder what happens if we blow through here, right? Looked like a bull flag, but if these things break down to the downside, they could get ugly, hoping that it would stick and we resume off over there. But we are now peaking down below, and I said this is not really support. The market was paying attention to it as support up until about, let's say, within the last hour, and then we peaked down below it. So the red line is the line that I'm focused in on. If we lose that line, that's when I become worried that we are seeing a technical breakdown, and then I assume that takes us all the way down to this line down over here. That's a pretty big space over there. Right now here, am I worried? No, I'm not worried. I think that the market is acting appropriately. And I think that the Fed likes how the market is acting right now. Now, the thought is if equity markets come off a certain amount, that at that point, Chairman Powell will have to jump in and reassure everyone that the Fed put is in place. And probably from that point, the markets will go off to a massive rally, right? That's probably the base case. But the markets correct, the Fed and everyone out did not like when the markets were trading up here, going straight up. I have to say they thought asset prices were, as they are, overvalued. And the market's correcting a little bit over here as long as it doesn't get out of control. They're very happy with that. That's my belief. Now, if things get, let's say, a little bit more chaotic, and they're not chaotic right now, but if they do get chaotic, that would be for us breaking this red line over here. That could be setting up a big technical break. That could, if we break then this yellow line, the one below it, that could be worrisome. And that's below there some point is where we would look for the Fed to come in and verbally say, we're there. All right. So that's that. Right. And here we are on the corn, on Bitcoin. And so a couple of things. I thought this morning, I don't know if we even made a lower low right now. Let me see what the low is. Yeah, 54,615 as in staying. My stop loss for a break even is 54,500. I assumed it was hit earlier today. It's just barely not, but that's a break even trade from my double black diamond. My stop loss for the black diamond remains over here at the lowest price right below that. And I give it space. There's about, I don't know if it's about $200, $180, $150, but there's a little bit of wiggle room right just below there, as I always do. So, I mean, I've already mentally just assumed that this is getting stopped out, and most likely this. I want to talk about where my particular stop loss is on, whether I will be de-risking, which I am, and why and where exactly. And with that, I just want to share Wes's chart over here of Bitcoin on the 3-day and his trend line that he has over here. You can see the touches and why he has it. I feel like if on my de-risking, and I just want everyone to know to help you make your own decisions, that I potentially could be very well doing that right into trendline support. That means taking my my entry from the most important trendline in crypto and my 3 entries from the wave of correction 1, right? I could be exiting them right into a trend line, and I will be doing that. I'm just letting you know ahead of time that I'm glad I have this vantage point to understand what I'm doing. And at the same time, if we're breaking down over here, I do have my stop losses right below. My stop losses are about 53,000, I think $140. I think, it could be 180. I think it's $140, 53,140. I want it below the wick of the last move. And just judging from both where we're looking at, you know what? That's what I feel the most comfortable with. And at the same time, I want you to understand that if I'm doing that, like Wes could have it here and I could be actually de-risking. So I want you to do what you're comfortable with. I'm doing what I'm comfortable with when I see that, like, you know what? There's extreme fear in the market. That's the first. It's Bitcoin and the markets right now. I feel like they're at extreme fear. I generally do not want to be like covering or exiting positions in extreme fear. There's no way I'm exiting any of my Bitcoin. I want you all to understand my spot Bitcoin, right? And this chart is like what I want you to understand. I'm happy to de-risk all things that I've taken since the mid-cycle low, get neutral, wait for clarity. And by the way, if we break down below this green line and in between this blue line, that for me is like a spot accumulation range. And that's what I will look to do. That for me is a place where I feel that Bitcoin is undervalued and I am looking to pick up Bitcoin, right? So it's not like the bullish case for Bitcoin, if we break down technically, diminishes in any way, shape, or form, such that the fundamentals of Bitcoin, from my vantage point, continue to only improve and improve greatly. Now, the macro and what's happening in the financial markets, we all know we've always deemed to be the greatest risk to the Bitcoin bull run, and the central bank, the Federal Reserve itself. And is that what's happening here? No, I think what's happening here is I think that the market is catching up to what the Fed's intentions are. And I think that, like, rightfully so, a lot's being priced in over here. Probably some profits end of year coming off the table, right? And I think that's going to radically change after the FOMC on the 15th. Once that unknown is no longer unknown, people are going to get comfortable. I think, and this is my view, people are going to reposition themselves, front running all the money coming into the market at the beginning of next year. And that's going to set off the beginning of what I think is the most probable end of the year move up. And then, will that continue in the beginning of 2022? That's my expectation at this point. Of course, you all know it's all fluid, but that's generally what I believe. And that, with that being said, that doesn't mean that right here, if we break down, that I don't want to protect myself. I do, because at the same time, what's happening right now, and when I say what's happening, is that the market realizing that the Fed is forced into tightening its policy, even though the economy doesn't warrant it, but because inflation's getting out of control, right? I understand that we kind of understood all that ahead of time, but that's irrelevant. The market is catching up to that right now. And to see the market, going into risk off, and you could see like over here, we see the market. This is a big move on FX. 1% or greater is a big move on FX. And you can see that we are in the heat of risk off, right? Now, could this continue going and get like unruly and aggressive? Yes. And if it does, it will get very ugly. Or could we kind of be like, as the market is finally digesting this information, could this be towards the equilibrium? Yeah, I don't have the answer to that. I truly don't. And that's why, just in case, if we get some breakdowns here on Bitcoin, I am more comfortable with de-risking the big trade I took over here, the 3 entries I took over here, exit them at profit, do not touch my spot, hold up my spot, and if we go lower, add to my spot, and then just wait over here till it's time to go ahead and start, seeing that we have some clarity and we're ready to move forward. Now, I hope none of that happens. Of course, I hope that we don't take out this last low that we put in on, what was the date of that? The 28th, right? When we, had that little grab and then straight up. I hope that remains, but if it doesn't, I prefer to get protected. I want you all to understand I might be getting protected right into a trendline support. I'm more comfortable waiting for then the clear breakout over here of the correction of wave 2, which I did thought happened on Monday. And at that point, look for to go ahead and get myself back into a more aggressive position of strength, which I'm already obviously in a massive position of strength. And this is all interesting, by the way. But before I move any forward, do we have any questions or anything that we want to talk about? Let me just go ahead and throw some tunes on for 1 second, just so I could catch up with all of you and see where you're at and make sure that I presented everything there as I wanted to, right? I'll come back to that.
Why is everybody in the world seem so divided? Why is everybody gotta hate each other? Who decided? If I took all the world's pride and all the world's money and wrapped it in a blanket and put it in a buggy, could you see that maybe that baby was just the same as you are? You know, it's never been easy. Every day for everybody ain't breezy. And I hope you realize when you look into another person's eyes, you know today would be a very good day just to have a good day. You know today would be a very good day just to have a good day. With a little more love and a little more laughter, a little more good vibes, less disaster. You know today would be a very good day just to have a good day. All day long. All day long. Good days, please come more often. Everybody's in the streets out coughing. Smog in the air, gonna send you to your coffin. Plastic everywhere down there with the dolphins. Everybody was born to a mama, so everybody is connected like karma. So disconnect yourself from the drama. Everybody's trying to heal like trauma. You know it's never been easy. Every day for everybody ain't breezy. And I hope you realize when you look into another person's eyes, you know today will be a very good day just to have a good day. You know today will be a very good day just to have a good day. With a little more love and a little more laughter, a little more good vibes, less disaster. You know today will be a very good day just to have a good day. And I say, hey.
All right, so we got some good stuff over here to talk about and clarify in. Let's begin with that. And we'll start with this. And am I on leverage? Yeah. Ashton, I've always, at every point along the way, talked about when I'm trading with leverage, where it is, and when those entries are taking place, right? Like, it's just this, I always do that. And you know, so right now, yeah, ever since the mid-cycle low and ever since we came, there's a video on the channel. It's like a 50-to-1 risk reward. You could go to the public videos and look for it. And that's where I began trading leverage again, coming out of the mid-cycle low and then throughout the correction of wave one. And then into the middle of correction of wave two, the correction of wave two, each and every one of those trades as they occur in real time, I share with everyone here. And not so that people will take those trades, but so people could learn in real time what I'm doing, right? And that's important. Yeah, but I will, if we have a technical breakdown, I'll take those profits and I'll get neutral. And when I say get neutral, that means only on any margin trading. On my spot Bitcoin, there's no way I'm selling it unless Bitcoin becomes overvalued to where I think that I need to sell it. And if Bitcoin corrects further, like down, I would be a buyer. Like, I believe firmly in the bullish case of Bitcoin. So let's see what else. There's a lot to talk about over here. This is an important just piece of knowledge drop. QE as a root cause of inflationary pressures, in that it has caused the velocity of money to decrease since 2009. A bazooka of QE would be catastrophic for the velocity of money over time. Yeah, we're getting down to the end game. This is why monetary reset is happening. And over the next, let's call it 5 years or so, 5 to 10 years, this is going to, or I should say 5 to 8 years, this is going to accelerate. Yeah, but good stuff, Bradley. So this was a question that Jimmy, you said, why didn't I enter at the blue line? I want to make sure I understand what you're talking about. So bear with me 1 second. And what blue line? I'm not sure the blue line. You're talking about this blue line? Jimmy, this is the only blue line that I see. And you said, why didn't I enter at the blue line? I actually entered a massive leveraged position starting at 42 into 48 and 52 on the break of the blue line. So I did massively. All right. If there's another blue line that I'm missing, let me know. Ashrin, as far as selling to the smart money, I mean, I consider myself the smart money. And when you say selling to smart money, I'm not selling my core position, right? My spot Bitcoin position, I will be looking to add if we break down and get back into this accumulation zone. But as far as if I see a technical breakdown, as you know, by the way, when I first started trading on margin, this aside, this was an anomaly. I took advantage of the anomaly. This was all purchasing spot Bitcoin in the accumulation zone. And then when we had the technical breakout done on this channel of the Bitcoin bull market, from here up until here, these were all leveraged runs and trades up until I said, you know what? May 13th, May 14th, I don't know what's going on. That was not supposed to happen. I am unclear. Get neutral. And then, days after, the price dropped down below. And then I put out the most important trend line in crypto. And I said, look, there's no clarity right now. You have to wait for clarity. We took the line of repair out of here. There was one and only one line of repair. It worked out. And then once we came into the most important trend line in crypto and pulled back, I said, that's where I'm beginning to load up. And then I also took leverage trades. It's all on video. Like, it's what we've done the whole time. So if you tell me that I'm selling into smart money, I'm not selling. I'm taking profits, and I'm taking profits to keep myself in a position of strength. Because if I don't take profits, I lose my position of strength. So I have no problem, like on some leverage trades, taking profits that I got to start adding over here, and then throughout the correction of over here, if I see that like something happened in the market that's not supposed to happen, and like the market a little bit uncertain, like getting neutral is a position of strength also, because then you allow yourself, when things are clear, and to just jump in and get strong again. And you have to be very comfortable with that. A lot of people, they want everything to happen on their timeline and when it happens. And that's not how this works. And that's why we're here together, to help everyone just see things a little bit clearer. All right. So with that being said, there's great questions today. Why look at the models? Just traditional TA. Can't rely on FOMO for market tops. It's not the same environment as 2000. All right. So why rely on models? So there's no one that I know out there that has had the whole time, the whole market cycle, their pulse on the market as we have here. And the only way that was done was through a model. I saw someone yesterday put out a tweet that was put out in September, and they're like, there's no way that I would have 10x'd my net worth had I not been if it was not for Jordan. And the only reason that I was able to help them do that was because of the model. And then these same people are like, you shouldn't follow models. Why would you follow models? So it's a lack of understanding of the markets. And, the only reason that I've been able to do what I've done is because of Bitcoin modeling. Yes, I understand that my TA is exceptional. I understand that my risk management is exceptional. And I understand that if we leave a model, that I could go back to relying on those things. But to not be taking advantage of a model, there's no way that you could have accomplished the things that I have accomplished, and a multitude of those within CTM have accomplished, even those that are saying, well, you can't rely on a model. Because they're the ones telling you the only reason they've accomplished what they have done is because of myself and what we've done here, and that was because of a model. So there's a lot of information put out there from a lot of people. It's up to you to be able to distinguish what is signal and what is noise. I'm not here to make those decisions for you. There's no question, if you commit your time to here, you're going to learn how to think differently, how to critically think, and how to be able to view multiple vantage points, and then decide for yourself which one that you believe in and want to go with. But at the same time, Ashen, there's no one who's using TA more so, and that's exactly why, because of TA, I will be willing to take profits on positions so I hope that's clearer for you. You seem like slightly off, and I don't want that. And so I hope, but when you talk about we're not in the same environment as 2013 and 2017, well, what's different? like that's what I would like to know, or what you see that is different, because there's always differences, and at the same time, there's a ton of similarities. And at this, I just want everyone to know, at the first earliest opportunity that I could say, I don't think that we're peaking into the end of the year, right? Plus or minus a few days, whatever. And you know what? This is lengthening cycles. You don't understand. Like I would with great pleasure, and I will reach out to Benjamin and be like, brother, you got it. You called it. The whole time you stood firm and you nailed it. Good job. Now, even if that means that, it winds up being that like the roots work of showing lengthening block cycles winds up being correct or anything like that. Not for me, in my view. I'm not doing that. I'm doing off time based. And by the way, Root put out a post yesterday. I retweeted it. He said, like, look, I've done all this work on time based and I've done it all on block based. And I believe like time based is where it's at. And he gave the reasons why. It's what I believed. And if we don't peak over here at that point, I think that the 4-year cycle is broken. And at that point, yeah, we have entered into lengthening cycles and it becomes uncharted territory. Yeah, I've thought a lot about it immensely. And as soon as we get there, we'll be able to talk and focus a lot more on it. But we're not there yet. And like, I don't understand why some people are in a rush to move forward. Like this is like this aside, like this is what we were looking for. Off the mid-cycle low, wave 1, wave 2. We're currently in correction of wave 2. Let's keep going and understand that the markets are fluid. And even though you would like for price to perhaps peak on a certain day, like it's a model, it's an estimate to give you some type of like understanding of what you're looking for. And everyone who wasn't using a model, by the way, like not everyone, I don't mean to speak like that, but most people who are not using the model that we're using, like they didn't know what was happening. They didn't understand, as we did here, say by the end of October, we'll put a new all-time high in, and doing that while price was at $30,000. And then after coming out of the correction of wave 1, they didn't load up aggressively on these leveraged trades over here because they thought we were going lower. And it wasn't until we got into above 52,000 that they said, oh, I was wrong. You guys were right. I thought we were, going to have a Y class, blah, blah, blah. And so like the same people are the ones telling you why listen to a model. But you gotta understand where there's, you gotta understand who's being authentic and who's not, who's out there deceiving and who's not. And it's all on video. So it's up to you to put the time in. It's up to you to do the research. But you have to be careful out there. So I hope that's helpful for y'all, especially you, Ashen, because you're off, brother, and I don't want you to be off. You're here with us. I want you to understand what's going on so you can move forward. All right. So that's why I'm taking the time with you here this morning to let you know. I know you would be feeling upset with the price not following the model, but during the last months of trading, I've learned, be it any trade, your stop loss is much more important than TP. Yeah. And that's why I'm looking to deleverage. And, just so you all know, and like, to be honest, I really don't care if the model's not correct. I only want to be correct. So what that means for me is that if I could go ahead and not have to deleverage and price goes up and the model breaks differently, that's the best case scenario, because the model up until this point has put us in the greatest position of strength. The model's also there to let you know when something's wrong. And this was the perfect example. I thought this was the mid-cycle shakeout, and I thought that was the V recovery. I thought this was the beginning of wave 1 into wave 2 into the blow off top. So when price came down here, I said, wait, that's not a V. That is wrong. I don't know what's going on. Get neutral. So the model could help me also over here just as easily as keep me in a position of strength, as let me know where I'm wrong clearer than anyone else can. And then that's when I want to go ahead and take advantage of that knowledge, de-risk down, stay in a position of power, and then move forward with the abilities that I have. So I hope that's a lot, but I think people might be very confused with whether or not I would care or feel upset if the model broke. To be honest, I would not. It served me extraordinarily well to get me where I am in this moment. And then I feel like if it shows me where I should no longer be following it, whatever that looks like, well, that's, and it could look like multiple things, right? We've talked about them all. And hey, by the way, all of a sudden, this one's looking like it could potentially even be likely where I thought just a day ago and 2 days ago that it was unlikely we would see this one occur. The market is fluid. You have to be willing to be fluid yourself and adjust to it as it unfolds in real time. That's, I think, what other people perhaps might like reflect their own views on myself. And that I understand that. We all do it. What's the difference, right? But I really don't care. I just want to get it right. And I hope you understand that that's authentic, and, we'll see. Well, I don't need to go further, I mean, I genuinely thought that for sure the model is going to, before making the adjustment over here, like, just going back pre-Thanksgiving, I felt like the model was going to be playing out on time. And for sure, there's no way I would have been posturing out in Twitter or in public or anything like that. You don't understand. If the model wound up being totally correct, with the greatest humility out there. And I started doing it all the way back in September and October. And all those who had different opinions, I would have, you have no idea how well I would have built them up and supported them. But at the same way, if I'm wrong, or if the model that I'm following is wrong, at the same time, I'll be out there, those who got it right, and give credit where credit's due. And that's awesome. And I don't know, by the way, what happens if we enter lengthening cycles, whether or not that becomes diminishing returns or increasing returns. I'm clearly in the increasing returns camp of what I would think would be happening into a lengthening cycle. There are many wild cards, and the biggest wild card out there is, of course, the central bank policy. I've said since 2020, it's follow the liquidity. And if they start pulling the liquidity away, could that drastically affect what happens in Bitcoin? Of course. There's no question about that, but that's not new for us. That's something we've been consistent about since early 2020. So that doesn't change. Like, if the central bank's policy changes, we need to adapt to it. It doesn't change the bullish case for Bitcoin in the long term, but it could definitely change what happens in the near term. And 2022 is the near term. So whether or not we wind up seeing diminishing returns or increasing returns, I don't know. We'll have to figure it out. We'll have to adapt to the market. All right. Will, this is something that could very well happen. We could see, and something that we continue to talk about, right? This is the model being wrong. If we put in a third wave, then the model that I'm following is wrong. Now, it remains to be questioned. I know Ted has already done some work up himself on what that would look like. For me, look, I prefer sharing all this information with everyone if that's the direction we're going. Or, so maybe as early as next week, we could see that. But right now, I can't do that. I'm not ready to make those pivots. But at the same time, for me, myself, if the model's broken, like the model's broken, and I don't have a model going forward. Now, whether or not it winds up being something like turning up like where the low is, and that's lined up off of wave one. And then we have like kind of what Will's alluding to, just a third wave, but the same type of, that could very well be. And if it's happening, I hope that I could see it and adapt to it. But I don't have a forecast of what it looks like if the model's broken at all. I will be watching the market and following price and leaning into my TA skills. And then if something becomes clear because you see psychological behavior playing out and we wound up like, out of the bottom of the third wave going into liftoff, and that we recognize like exactly what liftoff looks like. And it doesn't happen just on Bitcoin. It happened on Ethereum in 2017. It's happened on many different assets. It's human psychological behavior is what's happening. We'll be there to pick it up and use that as an edge. But I don't have like a model of what it should look like if the model breaks. Like, I'm following the 4-year cycle, and the 4-year cycle has allowed me to get into the position I'm in. And if that breaks, it's broken. And even if that includes like lengthening block cycle, aka, per the root, which happens to peak at the same time as Tech Dev's gold fractal. And it could look like just one extra wave here, and then we move into liftoff. But that's what we'll be observing and watching. I hope that's clear for everyone. So any advice of those who bought new could we just smash a thumbs like if you are getting any value out of today's session? That would be pretty cool. And thank you for everyone who has. What do we got? Yeah, we got a full house. So let's smash the like button. Any advice for those who bought on Robinhood stop losses, right? Yeah, 100%. I just told you where my stop loss is. I don't know where if you are new, the most important thing and the best thing you could do is in the Discord, search line of repair. Find that playlist, right? Make sure that you start catching up from, if you watch these past sessions that occurred all through here, you will be like, your knowledge will be exactly where it needs to be to take you forward with us. You will be sharp. That requires a bit of commitment. That requires a bit of investment. If you're just starting going forward with us and you're just going to commit to watching the daily live streams, you will get there as well. But you will not have the benefit of understanding exactly how until we get there. But you should not do anything outside of what you should be doing. So that starts with watching the foundational plan for Bitcoin, the foundational strategy. And that means not trading whatsoever, taking a Bitcoin position, understanding why your stop loss should be 0, understanding you could lose it all, what the risks are, but that by going ahead and investing, or something like $3,000 a year, $250 a month, right? So $250 a month for 12 months, 70% a year over the next 11 years, and the math is done well on the video, right? But you have to understand and you have to have the foundational plan in place. My stop loss, I told you exactly where it is. It's at the low of the move. I'm watching the technical break on the linear of this trend line over here. We looked at it in detail in yesterday's session and on the log scale. And if we break down, I'm keeping my stop loss at the low of the move. I understand I could be exiting right into this trend line support. Wes is pointing out at the same time, because of the current uncertainty in the markets, them catching up to that, listen, the inflation's out of control. The central banks are pivoting to tightening. And I'm not making that up today as the headlines say it. That's something I've been telling everyone a month in advance or more that I saw happening, right? But it's what's happening. But today the market is kind of like waking up to the fact and it's being priced in. So when there is a little bit of uncertainty, things could unfold further. I'd rather stay in a position of strength. Lucas, I don't know what this is. Ken, Lucas Dowie shows how big money is headed for the door. I follow what we do here because ever since we started this channel, and you're talking about the internet, there's a lot of people out there coming from a lot of different, there are certain people who are macro experts, and there are certain people who are equity market experts, and certain people who are experts on, I feel like we've covered it better than any of them throughout the 2 years that we've done this, right? In real time as it occurs. So I don't even know what the big money is headed for the door. Yeah, I don't know what's sensational, what's nonsense, and things like that. So is that big money going to enter the door towards the end of the year, front running the big money coming in January? I don't know. We'll see. But understand that these things take a while to play out, in such as that if the Fed is beginning to pull away liquidity, right? And there's massive liquidity worldwide, even though if the Fed starts tapering, right? The ECB has not begun tapering, and they don't plan to until the end of the first quarter at the earliest, March 2022. China, who has not been, expanding their monetary supply, is just beginning to. So as the Fed kind of tapers off, you have China picking up that slack. There's ample liquidity out there still. The whole signal that we follow is follow the central bank liquidity. We're seeing a turn, a pivot in policy, but that could take many months to play out, including if they get to the point where they're able to put in that first rate hike things are not going to break the day they hike rates. There's going to, I don't know, I can't, like, you're asking me to predict what's going to happen like months in advance. It's impossible, but we have the guideline of what we're following. I don't think that as soon as they raise rates, the markets break. It begins, right? So we continue watching. Is that good for everyone? Everyone understand? My takeaway from today's session is when necessary to take profits to keep your position of strength, right? There's no model, no equals no situation. Fabio, I think you've got it all, for sure. And I also feel like that's a summary of everything that we've always done and talked about. And I hope that we're at extreme fear this morning. And I hope that I don't have to go ahead and de-risk at all. But if I do, I will maintain a position of strength, right? And I think that's what a lot of people got wrong over here when I said, hey, and by the way, but when I said, I don't know what's going on, get neutral, there were other people who decided that, you know what, I'm going to take risks because I don't care. And then, like, when I'm wrong, I could get all emotional about it. Whatever. Like, that could happen here. Like, if things go wrong, like, hey, listen, great if we go like this again. You have your spot position, yeah? Good. Oh, by the way, if that happens and then we break a new line of repair, like, you're beginning to position back in, yeah? Oh, yeah. Okay. So what's the big deal? Like, if you can't take profits, then this is not for you. Like, if you're like a deer in headlights and that, like, the only way this works for you, if price goes straight up, you do not have what it takes at all. Maybe consider just taking a spot Bitcoin position that you feel comfortable with risking and or could lose it all. And then just, like, continue spending your time learning about the financial system in Bitcoin so that you could have more firmness in holding that position for the next 10 years. That might be best for you, right? What we do here is extraordinarily advanced, and it's the best of the best. So that requires being able to do things that maybe seem counterintuitive. And protecting yourself is always strong. And by the way, when we're talking protecting ourselves, we're talking about taking nice, sizable profits. For most people, that's the best they could do all year. That would us be like, didn't work out. I wasn't able to push my trade all the way to the top. Let me just go ahead and make sure I'm protected in case we do see the market fall out, and we'll see what happens. So what else? What's my opinion on someone just buying Bitcoin and not trading? Would your opinion be to sell it if it hits 53,000 or not? Chio, my opinion, and I spoke with close family friends yesterday of significant means and made it very clear to them that there is risk involved and that things could get ugly if, not only the U.S. government, but and or the G10 in unison decided at any point in time to come against Bitcoin. And why ultimately I think Bitcoin would win, there could be significant pressure. My view is that if you are taking a Bitcoin position, a spot Bitcoin position, looking to hold it, I would not be looking to sell it personally at 53,000. My stop loss would be zero. And my stop loss would be zero because you could have things that occur like something like an internet outage, right? And you could see, the price of Bitcoin, in my opinion, if there were to be some type of huge anomaly, it would wind up springing back. I don't want to have stop losses set at $20,000, 19,400, the peak of the last bull market, and then price momentarily, go down to 8,000 and then spring back up. Because I know Bitcoiners, and Bitcoiners understand money, and Bitcoiners understand Bitcoin, and they're not selling their Bitcoin. You have to understand this one thing, for those that are new to Bitcoin. I myself and a multitude of others, they held Bitcoin as Bitcoin went down to $3,800. And it wasn't long ago. It was not long ago at all. It was a year and a half ago, right? So we didn't sell our Bitcoin. Do you think we're selling Bitcoin? No. right? So it comes from you understanding markets, money, and the bullish case for Bitcoin. But in asking me for where you should go further, no, I would not sell Bitcoin at spot Bitcoin at 5,300, right? I personally wouldn't. Now it's also different. Yeah, like my situation, your situation, everyone's situation is very different. Right now, if you're in the US and you took a Bitcoin position at like say $60,000 and price breaks 53,000, like consult a tax expert, which I am not, but you could sell Bitcoin at that $7,000 loss. You could buy Bitcoin either lower and or higher if we broke the trend line and actually be able to write off that loss without having a wash sale. So like a lot of people, I think, oversimplify something that's really complicated, and that's how you execute. So it's not like there's not one size fits all. All right. So I hope that's helpful, and what it should be helpful in triggering something that you're going to go spend the rest of your day researching and figuring out. All right. Right. So VacaNet is yes, the rates are not enough to stop inflation or devaluation. It'll slow it down, but there's nothing that will stop the train wreck in a year or even further. Like the deflationary forces out there are extraordinarily massive. Do listen to Jeff Booth and listen to like some of his interviews, the way that he explains it. But the deflationary forces are, whether you're talking demographically or more importantly, the rise of technology, are utterly massive. And that's why the Fed is able and the central banks are able to come out with this massive printing. However, and since 2020, it's been massive inflationary, right? And a lot of macro quote unquote experts got that very wrong, right? And most Bitcoiners got that right. But how long there is until all those forces take hold, I don't know. We're here together in the war room each and every day trying to figure that out. Right. Well, yes and no, Salamando, right. So the red hikes are happening so the Fed can say we tried, right? We did it. And even with the taper, you're right about that. Like if they can't continue tapering, they could be like, well, we did it. We said we were going to taper. We did November, December. Yeah, we did it. But like there's a new variant, so we need to print more money or whatever it might be. It's my own personal belief that the reason that they need to taper and or begin a rate hike is because the inflationary pressures are too much that they can't hide it. And that's going to like knock it. And then, and that's going to buy them more time. Remember, they're trying to like make the jump into whatever new system they can create because this one is destined for failure. And all they're trying to do is buy more time, continue taking money from all of us and redistribute it to whoever they might be. And it's not Jerome Powell or any other academic who has a PhD. It's the people that are actually the shareholders of the Federal Reserve and or these central banks, right? So I think what they're trying to do is buy more time by raising those rates. I think it'll eventually cause a breakage of the system. I think we then see the dollar milkshake theory play out once again, and that we see a shortage of dollars, which then causes them to come in and bazooka next round of QE, which will buy more time again. Jordan, perhaps play some head snack to keep. Definitely. That's a good one. Let's do that over here on this Friday. Because right back at you, brother. Right back at you.
Conquer the markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip a matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Foster's working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing. The prices might be slashing just to pretend they're in fact.
So wait a second. I mean, this is one difference. This is awesome. I was thinking about it earlier while I was speaking with you. This is one huge difference between what's happening right now today and what happened in March 2020, the markets were broken, and it's all in the video here on CTM. We were talking about it before like the meltdown, but it was actually the global lockdowns that caused the crisis. It was the pin that bursted the bubble. Like the odds of the world right now going into global lockdowns, I think are a lot lower. I think, these people are diabolical. Who knows what's going to happen? But at the same time, yes, that's a big difference between what happened then and what is happening now. So before everyone leaves, let's go ahead and do this right now. This is equally as important. The Big Cheesy went ahead and recorded this amazing presentation. I want you all to be able to see it. And by the way, you'll see this might have been, we were talking about that because of how Bitfinex Whale was positioned, that we were looking, or he was looking, I should say rather, that this was actually going to backtrack right to where it is right now today. And was very confident by following the Bitfinex Whale, who you could see right now is not taking a short position, but is covering shorts into this down move, right? So what I'm going to do is, let me just jump over to the Discord really quick with all of you. I just went ahead and posted it. And I posted this chart view so you could have this chart layout yourself. Go ahead, you'll get a read-only copy of it if you click on the link. And then go ahead and make a copy yourself, or just view the read-only. And then watch the video when you have the opportunity today, tomorrow, Sunday. And then I made the new discussion channel within Discord, the Bitfinex Whale, where everyone could kind of work together going off of what's presented in the video, helping CTM and that hive mind get together and continue forward. All right, everyone. So with that being said, good session, important session. I think that they are, each and every one of them. And glad to be here doing this and navigating the markets with all of you. Where are we? Let me just take a look and see what's going on over here. Let me find the chart. So S&P 500, it's kind of near its lows. Nasdaq's down 2%. Watch what happens there. Watch if that winds up being, maybe it's up a little bit higher. Watch if that winds up being resistance, right? I'll just leave it where I had it. But watch if that area becomes being resistance and we get rejected or get back up in there. Let's see what happens. I think everyone should have a pretty good clarity of where we are today and where we go forward. So we'll pick it up again Monday, everyone. Have a beautiful weekend. May God bless you all, and thank you for everything. All right, fam. I'll talk to you later.
To the moon, throw from the plateau, make the play. Boom, boom, it's a taco day.
That's right, Jan. That's right, Jan. That's right, Jan. Thank you, my brother. Have a great weekend, everyone.